Wednesday, May 21st. Market analysis. Stan Ehrlich, good morning. 9:55 California time. We start out with stock market indexes and go to futures, and I'm monitoring about four stocks in the last month or two. Apple's one of them. Now, the stock market indexes have gotten stuck for approximately the last week or so, but at a resistance area in a general sense, some of them more accurately than others, but all of them in overbought conditions. When you get into overbought conditions, normally you would expect the market to turn back down for some period of time and for some particular sizable break, not necessarily huge and not necessarily for very long. But sometimes they are very substantial breaks and they last quite a while. So it's difficult, well, depending upon the level of overboughtness, to tell how much of a break you're going to have. Now, considering that, we did get up into the middle and a little bit above the middle 80s for most of the RSI levels, and this is a custom RSI, my Ehrlich reversal version of it. There's a variety of things, let alone the way it's plotted on the screen. But it turns yellow when you're above 75 or turns yellow when it gets below 25. I learned RSI from Wells Wilder himself in the late 70s and 80s. So, we're overbought, E-mini, yellow on the price action and RSI. I'm hoping to get a bearish engulfing within the next few days because that would turn red and be a sell signal. Something along those lines, modest break, no big deal. Green was bullish, nice move up. Couple of reds did top out, not exactly the way I would have liked it. Green, a bottom, oversold yellow as well. It worked out really, really well. And a couple of minor downside dips on the way up because it got overbought on the way up, which is what we're doing right now. Enough said. Well, how much down is it going to go if I'm right? To a support area at a minimum, I think 58.46 down to, say, 5800 would be very likely. Now, there's also a gap to close at 57.30 down to 57.10. And then below that, I'm not ruling out at all. And that would be 5600 and slightly under. That would be a fairly substantial break, probably taking a couple of weeks or more to evolve, which is in the cards, in my opinion. Not necessarily down to 53.50 to close an old gap back from late April. I think that one may not end up getting closed. At least I don't have the expectation of that at this particular point. So my downside objective at the moment is 5600. Next chart is the E-mini 1 minute data. And we can see that it just popped up to slight new highs for the last several hours, but not quite for the session, which started yesterday afternoon, of course. And so it came close, and now it's backing off quickly, but nothing dramatic. What about the SPY? It does have a lower low than the previous day. The E-mini, by the way, does have a lower low than the last one day, but not the last 3, 4, 5, 6, 7 days. When you'll see that in one of the indexes in a minute. So back to SPY, held, okay, overbought still, yes. Generally in a broad area of resistance where it topped out from, say, November through late February. Yes, in that general, very broad area of resistance. And the 1 minute chart's going to be the same. Tested some minor highs here in the last few hours. This is a new high for the session, but it started at 6:30 this morning, not yesterday afternoon like the futures. And QQQ is a slightly different story here. It has an outside trading range day. It is overbought. Now, all I need is for the QQQ to close below yesterday's close, and it will be red, an official sell signal. So far, that's the only index that allows that to happen for today, unless we see a little more strength and some higher highs. Most of them have made it below yesterday's lows already, and there may be, I think all of them are overbought. So just some sort of a bearish engulfing here would be great. And maybe after a little tiny bit more strength for an hour or something. But we're also dealing with the potential of a new high close for the trend up on the QQQ. And I believe we made barely a new high by a very small amount. Today's high is extremely small amount higher than 2 days ago, the top, which at the time, 2 days ago, it also made a new high by a very small amount from 2 days earlier than that, or 4 days ago. This whole thing has got a very tiny upward slant to it, but for the most part, it's a big way sideways trading range. So something's going to happen here pretty soon. NASDAQ, same story. Futures contract, that is, NQ. Near the top, not quite a new high, not quite an outside trading range. All it needs is a very small little bump up, and it'll get higher than yesterday's high and then qualify like the QQQ did. But this, of course, has got the 23-hour-a-day trading session time frame. So the key to the downside, in my opinion, is getting below 21,101 for the NQ on a close. Then we're headed down at a very bare minimum, I believe, to 2874, but more than likely going to close a gap down here at 2370 down to 2285. And I'm not ruling out I move down into the range of 19600s down to 19090-ish. Call it 19100. Maybe. That's my ultimate downside objective at this point. I'm not quite sure we're going to get there, but depends. Next, NASDAQ, 1 minute, did pop up, tried to make a new high, higher than yesterday, missed by just a tiny bit, and then dropped off to new lows here for, a couple of hours. That's modestly interesting, but I really needed to go down a lot. I would say closing below 21,300 would be quite bearish for me, and of course, if it made new lows for the day. Very bearish. Now, YM is having the least amount of strength. It's near its lows still now. It is at a minor support level. It did get overbought. It came nowhere near yesterday's highest high for the move up, which, by the way, made a new high for the move up and closed below the previous close. Now, that is a little bit of a reversal of sorts, not very dependable upon, in my opinion, but it also came close to the high back on March 26th and overbought. So it could be starting. Now, that's a new low for 3 days, but barely. Nothing, super bearish here. Looks like this is going to be able to make the new lows for the session the first. That would be the Dow, or the YM. The Russell, close behind. Looks like it made maybe exactly the same low as 2 days ago. Real close to a new low for about 6 previous days. If it can get below today's low, I think it'll make a low lower than the low May 15th. That is going to look like a little bit of a downside breakout out of a trading range resistance area after having gotten into overbought conditions. Then we're going to close a gap 2053 and a little bit under 2046. And I think testing the support area at 1905 and a bit under is not out of the question. Okay, Russell, 1 minute, slipping off a little at the moment. Bonds and 10-year notes, then metals, then energies, then metals, then grains, and some meat, and some stock. So bonds are close to making a new low for the trend down, but they do have a great bull trend line that's already held a couple of times. That I would consider to be a test of the trend line. It's not exactly on it. And then a couple of days ago, it was. And now we're trying it again. So this is a spot to watch very carefully for buying signals. It is a price level which I think has a relatively low risk because my protective sell stops under the market would be somewhere in the ballpark of 111 and maybe even down as low as 110.15, but that's a significantly larger risk if your account can take it and you can take it. I would put that into consideration, but mostly a little bit below 111. And being a buyer, if you get your personal signals to go long. But it's the right price, it's the right conditions. And we're also almost oversold. Super close. A little tiny dip to minor new lows by just a few ticks will probably do the job, and you're right there at the trend line also. Next, 10-year notes gave us a buy signal on the 15th of May, and it's still good. Went up for a day, came down, kind of scary, came close to making new lows, which is my fail-safe protective stop below the low of the signal. And today we're challenging the possibility of having a new low close to the move down, and we're also getting awfully close to a lot of sell stops and killing the signal, which, if that's true, worked only for about a day, but it worked a little bit. I wouldn't call it a very good signal at this point. But if it holds and starts to make highs higher than 110.22, that is going to close a gap above the market and start to cause the signal to look a lot better. Next, we've got crude oil. Boy, this is interesting. Today's rally, although it's a new high for about a month, bumped right up against resistance for the second time and topped out. And we're now back to lower on the day. Not only that, the low today is below yesterday's low as well as above yesterday's high. So that is a bearish engulfing right now. Unfortunately, we didn't hit overbought, so this is not going to be turning red, but everything else looks interestingly bearish. We need to break the low. It's stopping right at the support level almost, exactly. So we're getting caught between a rock and a hard spot, but because of the bearish engulfing, if it closes lower today, I would expect it to continue to work down, probably to test 56, 55. Next, this is fascinating, people. I haven't seen this for a long, long time. I will actually go to the trouble of doing this. From the highest high for the first shoulder to the top of the market, I'm just measuring the distance time-wise, and so that is your stick. So I'm grabbing this measuring stick and going from the highest high all the way to where it is in the future, and we were like 1, 2, 3 days, maybe 4, earlier than the perfectly symmetrical possibilities. From the highest high of the first shoulder to the head, you oftentimes get very close to the same amount of time from the head to the last shoulder high, and that is forecastable. It worked because it was only 3 or 4 days later than you would expect. Now, on top of that, look at this. We have the highest high for the first shoulder, and a perfectly horizontal line leads you to this price right there, almost exactly at the same price. So if I had drawn a circle, I would have drawn a circle right around this price level and that time frame, and I would have been on the right-hand side of the circle for the last shoulder high, and I could have drawn the circle way before it happened. I've done it before. Not only that, you now have a little pimple on the left shoulder. That is the rally high on December 30th. And it is 1, 2, 3, 4, 5, 6, 7, 8, about 9 days before the real first shoulder high. Then you've got this last shoulder, I think, and 1, 2, 3, 4, 5, 6, 7, maybe 8 or 9 tomorrow and Friday. You've got another potential pimple on the last shoulder, symmetrical beyond most examples. Again, I haven't seen this little double situation Not only that, the first rally high and then the highest high for the shoulder happened after that. In this case, it happened highest high first, and then the second little rally, if I'm right, is happening after the last. So you've got the upward slant, you've got the downward slant. Everything slants up, everything slants down. You had a head and shoulder top as far as the head is concerned. Wow. This is a almost, I could say, a triple, but not really. But it's a double potential combination. Head and shoulder top, small, is the head of the formation. The larger head and shoulder top remains to be seen as to whether it's going to break out. Now, I've also drawn one extra neckline, and that is across that low right there on January 3rd of this year, because it is the lowest low after the first shoulder begins, but I think this is the more classic starting point. Now, if you use the new neckline that I drew, the pivot point is the same in both cases. That doesn't matter. And guess what? The trend lines, necklines are very close to each other, and neither one of them were violated on this little dip we had a couple days ago. And if I'm right and we break below both the lines at the same time on the same day, I'm not going to be a damn bit surprised and probably come down to the support area on the first breakout day or first 2 days or lower. This is really interesting. Okay. Heating oil popped up a bit, bounced off of some support. I'm getting a little bit more confident that we're going to attack the rally highs at 2.718, let's call it 2.18, and then attack 2.25. Best I can say. Next. Oh, yeah. Supporting that is the fact that we got some buy signals at the bottom. The absolute low day, of course. Well, I like to say every time, but that's not true. But sometimes there's the high day exactly. Almost the high day. Almost the low day. Just a couple of weeks ago. Working great in general. Next chart. Gold popped up very nicely. Wait until you see platinum this morning. Holy moly. So gold popped up, maybe getting dragged up a little bit with silver because of platinum, which is huge. But we do have what looks like maybe somewhat of a downward slanting channel here. Not that clear. Let's try to draw the bottom line in real quick. Yeah, that's not all that bad, actually. So they're not quite parallel, but yeah. So I'm looking for a move up to 33.80 something. Next, we have silver getting up to and above resistance levels, coming very close to a new high close since early April. Well, actually, late April. But if that happens and you make a new high, it'll be the highest high since early April. I think there's a good chance of that. This is a short-term upside breakout. No sign of it getting super overbought right away here. Only at 65 at the moment. Looks like it's going to break this resistance level at 34. And let's see what happens if it can get all the way to 35 3/4. Platinum. Wow. Boy, it looks like the old catalytic converter days when the industry discovered you could help prevent air pollution by using platinum in the catalytic converters, a new invention in the old days. So, hit resistance almost exactly. Overbought like crazy yesterday and today, a lot more overbought, got up to 83 almost. Now that's not terribly overbought, but the last time it was up to 83 or 4, it topped out for a couple of days and a pretty good break and a big bearish engulfing ER sell signal. Last time it got close to that was a top in the market profoundly, and that was way back on October 30th, 24. So we're setting ourselves up for a hell of a sell signal, in my opinion. Next, copper, couldn't care less. It's up slightly, making a new high for a couple of 3-4 days, still between a rock and a hard spot. I don't know. I'm going to wait in copper. Now, grains are doing better today, but not good enough, but better. We got a rally, I think, in everything. Soybeans are up a bit, new high for 3 days. I really have to have a close above 1082 to get the ball rolling again. And then the head and shoulder bottom that I've been talking about for many, many weeks is going to be coming back alive. Not back alive, but looking a lot more likely. I was a little worried, and still am, about these lows getting broken, particularly the 1036 area, because that would probably predict a move a lot lower than I would like, as far as still being bullish long term. But now, hey, pretty good. Again, I need to close very soon, sooner the better, above 1082. Next, soybean oil, popping up a little bit. Now, we did have a breakout on the neckline of this head and shoulder bottom, which I have erased the markings. That was the shoulder. That was the second shoulder. This is the head of the formation. There's the first inside shoulder and the second shoulder. Here's the neckline. I did leave that on the screen. We closed above it, stayed above it, but got overbought. And then all of a sudden, on May 15th, dropped way below the neckline, closing way below the neckline, and definitely a big no-no. But so far, it seems to have stopped in support and climbing back up on Monday, Tuesday, and today, Wednesday. So as long as it keeps climbing in right away, like I said a couple of days ago, I'm thinking of forgiving this false breakout situation. I might want to raise my neckline up to across that high there, but I don't think that is necessarily appropriate. So I'm going to leave it where it was right here and see what happens if we can get back to the neckline. Otherwise, a new low, especially if we get below 47.18, continues to, ruin the pattern. So I just might put these markings back in again soon. Next, soybean meal. We've got a rally today, but so much resistance above. No particular indication of a major bottom. Yes, there's a chance of a double bottom. And yes, we had a bullish engulfing yesterday. But no, it wasn't oversold. And no, it wasn't a bullish engulfing ER buy signal. So I got very little to work with as far as telling you this is a double bottom. I'm not convinced of it yet. It would be nice, but I got to close a minimum at, say, 300 or higher. Otherwise, I got to be neutral to bearish. Next, corn is popping up a little bit yesterday and some follow-through today, which is nice. But again, this low we had a week ago at a support level was 2 months late as far as the timing for the last shoulder low, which I did think had developed because of this double bottom, which I did get a great buy signal on the second low that worked very, very nicely, all the way straight up to overbought resistance and then turned down more than I expected. So if I choose to tell you that this is a head and shoulder that's very lopsided, it's going to be a while because I really have to start to get up to 480, 490, and in fact, above 500. Then I'll feel a lot more confident that we will go way, way, way up to 640 if the pattern continues to develop and all that happened incorrectly was the symmetry. Timing was way off. If it goes up, I'm not sure yet. I have a problem with this way, way late low. Next, wheat. Like soybean meal, not much to talk about that's bullish. We just got up to my first objective resistance level today, and it's already slipped back below the middle of the range of the day and only a little bit higher and could easily turn out to close lower on the day. And that's a test of resistance in a bear trend with lower lows over time and lower highs over time and no buy signal that's working for anything substantial. And that's it. I'm neutral to bearish. And now, because of the resistance being tested, and it came up close to overbought, but not quite. So it may be turning around now, going down, I think. Cattle slowly coming up a little bit. That's the retracement after the sell signal, which turned out to be extremely good for one day, but still very good. Even if it wasn't for long, it still was a big break immediately after the sell signal. And now we're crawling up just a little bit and barely making it higher than the day after the sell signal. So if you're still short from the sell signal, you probably should have lowered your stop quite a bit, and maybe you got bumped out, but you don't want to give away a profitable position. And that really depends on where you got short. I know that my system would have gotten short at about 210 and 0.50. Just a hair below that low. Okay, let's call it 210 flat. That's fine. So I still have a little bit of a profit for ER1. Well, yeah, ER1 overnight. That's where it would have gotten short. What I don't know is how low the stop would have come down automatically, because I'm not running the strategy on this chart at the moment. But I am allowing for the signals to be shown visually. Okay, hogs. It's in a pig pen. It's sideways. It's restricted by resistance and support levels between a rock and a hard spot. Let's go to the stocks. Shell, up a little bit. Resistance level, not overbought. I suppose it could keep chewing its way up some more, but I'm not particularly super over enthusiastic. Yes, there's a couple of gaps to close in the ballpark of 69.30 and totally closing the gaps of 69.65. But don't forget, there is something up here at 71.82. But on the other hand, there's a gap below the market at 63.40. Right now, because of the higher lows and higher highs, I'm looking for it to make minor new highs and start to close these couple of gaps. Next, Apple. Very interesting. I thought this was an official upside breakout on May 13th because it closed well above the neckline. This is a not so big head and shoulder bottom from March 13th shoulder low to April 8th, about a month, to May 7th, about a month. So it's a 2-month wide head and shoulder bottom. Neckline classically slightly downward slanted, fine. Tested the neckline on a move up on May 12th. Got above, stayed above, closed above. On the 13th, the neckline, breakout. It's supposed to be fairly volatile day, strong, large volume, and some follow-through, usually for a day or two more up. That didn't happen. But on the 14th, there was no rule violated. I just didn't get my pop-up. The next day, we were testing the neckline, which is okay, and we closed above the neckline, so we're safe. And that also developed on the 16th. So where's my rally? Didn't happen. We dropped below, but closed on the neckline on the 19th. So maybe it's good, maybe not. I had to waffle my answers yesterday also because it closed super close, but under. Today, I'm sorry. Even the high of the day is below the neckline or right at it. We made a new low for the last week since the false breakout, which is now what I'm calling it. And I'm expecting a move down to probably 193 and a quarter and maybe a bit lower than that. And I'm probably going to erase my head and shoulder markers. I might as well do it now. So now I can't call this a head and shoulder bottom anymore. I'm going to leave the trend line in because the neckline is a form of a trend line. And for the moment, I'm also going to erase my upside objectives. Support and resistance still applies. There's no change in that. We got Tesla. Sideways for a week. New highs, couldn't hold it, dropped back yesterday. Today, doing a lot of nothing, up $1.18, 15 at the moment, which is minimal on a $344 stock. There are a couple of gaps to close below the market, and I can't rule out, and I do expect that will be coming down to 307 to close the upper gap. Maybe down to 291 to support. And I think there's also a chance 277 to close that gap, and you can't rule out something way down here, although I don't think this is particularly likely. Back to the E-mini. I'm sorry, we got Carvana, the last stock, testing support right at it near today's lows, and now coming back up a little bit, slightly higher at the moment than the opening, but still down 680. So minor new low close for 4 or 5 days, but support is not broken. I think it's going to try and close the gap down here at 266 to 263. We'll see if it can do that. Next, E-mini. Almost low and last. That's becoming a lot more interesting, people. Wow. Okay. While my back was turned, this is what I wanted. This is what I wanted. S&P 500, little delay. Q's the same. Do we have an outside day on Q's? Uh-oh. We just did. We just went negative. I saw a negative 101 here a moment ago on the last tick. That is on the verge of having a bearish engulfing ER red sell signal. Wow. We could have it. Okay, on your toes. You guys have a great day and profitable trading to you.